episode, which will focus on positioning for compliance, understanding the new tax law. It is actually a very practical guide for HR practitioners and business owners. And we have a seasoned professional in the room to discuss this topic with us, topic that is actually one of the buzzwords in the HR industry today, which every HR needs to be aware of. So I'm privileged to stand in for Mentor Dr. Oliemi to introduce our speaker for the evening. Our speaker for the evening is Mr. Thangood Simeon. He is a seasoned legal and business strategy expert with a strong background in corporate advisory, human capital development, and legal compliance. With over 7 years of experience, he has successfully guided organizations in optimizing their workforce, enhancing operational efficiency, and navigating complex regulatory landscapes. He is a qualified lawyer, having earned his law degree from the University of Nigeria and a certified coach from New Skills Academy, USA. He holds a mini MBA from Tekedia Institute, has attended the Mastering Human Resources Management Executive Program at Lagos Business School, equipping him with business acumen to drive enterprise growth and transformation. As an associate member of the Chartered Institute of Personnel Management, CIPM, he is deeply involved in workforce strategy, performance management, and corporate governance. He is currently running his master's program in international human resources from Rome Business School. He is the head of HR and policy development at Etana PLC and also the partner and lead consultant at ChancePro Consulting, where he advises established organizations, startups, and individuals on business strategy, legal compliance, and HR advisory. Ladies and gentlemen, please, with a round ovation, let's make welcome our speaker for the evening, Mr. Thangood Simeon. Thank you. Please, over to you, sir.
All right. Thank you so much, Tochukwu, for the warm introduction and welcome. And I also want to thank Dr. Oliemi Adeosun for this opportunity to use this platform just to communicate knowledge. I promise you it will be snappy, just so I wouldn't waste a lot of our time. I understand this weekend, we might be coming back from a lot of activities or preparing for a lot of other activities. So today we're going to take it straightforward to the point. I'm discussing on positioning for compliance, understanding the new tax law, a guide for HR professionals and business owners. So my assignment this night is very simple and straight to the point. The goal is, after this brief session with everyone, we will begin to see compliance from a different point of view. We won't just see compliance as something to be scared of, something to just tick the box. The goal will be to see compliance to become a cultural thing, so that whenever you're talking about compliance, it is something embedded in your culture, whether as an individual person or as an organization running a business, right? So you don't just see compliance as something you have to get done with and then focus on other things. No, you begin to start seeing compliance as part of the business, as part of the culture that will drive the business. With that mindset, with that approach, you begin to understand the nitty-gritty and why why compliance is very, very important. And that is something I'm trying to dissect this evening. So with that compliance, we know that there is the new tax law in place. And with that, we're going to touch on the new tax law to understand some things that concerns the new tax law in the Nigerian ecosystem, and then narrow it down to the HR professionals and business owner. As the anchor said, my name is Thangood Simeon, and it's so good to have you here. So the table of contents meets Thangood Simeon, which has already been done, right? So the next thing will be for us to talk about in the introduction and objectives, then why compliance matters, overview of the new tax law, implications for HR and business owners, and then the action plan to follow, right? I'm just going to make this as quick and snappy as possible. So we'll have to get into it. So the first one is the introduction and objectives. What is the purpose of this, right? The purpose of this presentation this evening is to equip HR and business owners with knowledge of the new tax law, right? Highlights the impact on payroll, benefits, and then compliance, and enable proactive compliance and risk management. Like I said, we need to start seeing compliance as something embedded in culture, something that should be part of your culture. Like in my organization currently, we are currently going through some compliance audits. I've made the staff to understand this is not what to dread. Even when the big fours are coming to check the books, understand that this is part of what is expected from you. So whenever you're working from a compliance approach. Whenever you're working understanding, okay, what if I do this way? Is it going to be in line with compliance, or am I going outside the compliance regulatory expectation for this, right? So when you begin to think and work with that mindset, it will shift a lot of your mentality about compliance. So you begin to see compliance as something that is very necessary and quintessential about the job process, and not just something you have to do once or twice in a month or in a year to abide by the books. No. The goal is to make sure that you are compliant and you understand the risk management that follows it. So that is the essence of our short presentation this evening, right? So why does compliance matter, right? Please, as I will always say, if you won't take out anything from this session this evening, understand that compliance is part of the business. Compliance is part of the business, is the nitty-gritty of the business. If there is no compliance, the business might be running at some point, but with time, the business will crumble because it is not obliging to the different compliance principles and rules that will make it thrive as an effective business. Imagine that there is no brake in a car and you're just speeding. At some point, you will hit something. So that is the brake there is to regulate. So compliance in a business is to regulate some things to make sure that you're operating business within the ambience and authorities of the law. That is very, very important for you to understand. So why does compliance matter? To avoid penalties and reputational damage. For me, business reputation is very key. Business reputation is very key. In fact, some people will take the reputation of their business above an amount of money or above a certain amount of money because they believe that with a good reputation in business, they can attract any value, they can attract any amount of money that they want to do business, and people will see them and deal with them in good faith. If they understand that a business has a good reputation, people will deal with them in good faith. That is very, very quintessential for us to understand. So why does compliance matter? To avoid penalties and reputational damage. That is very important for us to understand. Then the next one is to ensure proper payroll, tax, and reporting processes. All of us, many of us here might be HR professionals, and if you're preparing payroll, there's some compliance stuff you must understand and you must abide by them. If not, if it's my friend, you say Mustafa will come for you. That's the tax regulatories or whatever regulatory bodies, they will come for you. Right, so that is why compliance is very important. Then another thing is that it strengthens employee trust and organizational credibility. When the employee understands that my organization follows the due process, they understand that they will always follow the ambience of the law. They have that trust with the organization, and also it enhances that credibility. Credibility is very, very key. It's very pivotal when if you're in business and if you're going to stay and be sustained in that business. Credibility is very key. Then it positions your organization for sustainable growth. Growth is not something that is a fast race. Growth is a marathon. And if it's a marathon, means that if you are not compliant with time, and these are some of the pitholes and some of the shortfalls of many startups. From what I do from the business compliance and legal compliance aspect of it, even HR compliance, many startups have failed because they try to circumvent the process. They try to circumvent the compliance process and try to do it in a sharp manner or with a sharp practice method. And most times it might work for them in the first 2-3 years, but in the next 5 years, 6 years, when they want to start to consolidate on what they are doing, they will begin to crumble because the foundation was not right from the start. That means that they were not compliant. So you see them, most of them, they will tell us, oh, you can just pad the payroll, you can just find a way to avoid taxation, tax avoidance, or tax evasion, right? So, but the thing is that you might not be able to do that as a startup. You might get away with it for the first 2-3 years, but as the system continues to develop and to gain more visibility, there will be times that they will come to check for your books to see if you are a compliant organization. And that is very important. So why compliance matters is that it positions your organization for sustainable growth. Very, very important. Now we're going to the overview of the new tax law, right? We can't talk about compliance and not talk about the recent law that is in vogue in Nigeria, which is going to be in place from next year. A lot of conversations is already happening around this, the new tax law. We are going from what we used to a new tax law, right? So that means that it's not going to be business as usual. And again, there's a lot of structural changes that is going to happen in the tax landscape. And as a business owner, as a HR professional, you need to begin to align yourself, align your department, align your business in respect to these tax changes. I'm not saying go and study the whole tax law. If you can, that's fine, right? But you need to understand some key changes that are coming into place in the new tax law, right? So this tax law introduced the Nigerian Tax Act of 2025, NTA. If you just call NTA, you should remember the popular television station that we grew up with, right? Is the Nigerian Tax Act of 2025. What this does is that it consolidates multiple tax laws and digitizes compliance. It has consolidated on many tax laws and also bringing a digital aspect to compliance. Very, very important now. And this act takes effect from January 1, 2026 for the personal income tax, and for the corporate tax, it takes place from April 1, 2026. Very important for us to understand that in terms of the new tax law. So from January now, in terms of the personal income tax, a lot is going to happen. A lot is going to change. And I need to say this now. For the personal income tax, I think if you're going to be earning above 800,000 annually, then there is a new personal income tax that's going to apply to you, right? It is very important, and we're going to look at it in the course of this presentation. I'm just going to touch, not to look at everything, but some key aspects that concerns us in this presentation, right? Then we look at some of the key changes. Some of the key changes in the Tax Act. Can someone confirm that they are following and they can hear me? So let me know I'm not speaking to myself. Please, can you
can hear you,
We
sir.
can hear you,
Go ahead.
sir.
Yes,
We
we
can
can.
hear you,
Thank
sir.
you. All right, thank you. So some of the key changes in the tax law or the new tax act is that, like I said, there's a new exemption threshold. If you're earning below 800,000 annually, if you're earning below 800,000 annually, you are not going to pay tax. You are not going to pay tax if you have a new threshold of 800,000 and below. You're not going to pay tax. That means there is zero taxation for you. But from above, you will pay tax. I think from 15%, they now cascade it down to the first 800,000, the first days, right, in the tabular form. But the new exempt threshold is that 800,000 below, you have zero thing to pay about tax. And this will benefit many of our blue collar workers. This might benefit some of them or some contract guys, right? So you need to take note of that and understand it. Then there's a progressive tax band. It starts from 15 to 25% based on the computation. It starts from the 15% down to 25% based on the computation from 800,000 and above. I don't know if that table is here, but I might bring it out to show us in terms of what the computation is going to be in the course of this presentation. Then another change is that there is a removal of consolidated relief allowance. So they removed consolidated relief allowance and they brought in rent relief. They brought in rent relief allowance. For instance, there is an amount you can claim and you will not be taxed to it in terms of your rent. The whole calculation and everything is not yet clear from the tax angle, but they've removed the consolidated relief allowance, and then there's a rent relief, so that if you can show that amount, maybe in the computation of your payroll, what we are seeing is that there might be a section that might be tag rent, that this is going to be used for rent. If it's going to be used for rent, the tax there will not, it won't be taxed. It won't be taxed in that aspect, right? Then there's also benefits in kind and digital assets are now taxable. Before now, most of the benefits we have are not taxable, but now benefits in kind and digital assets are now taxable. Some of the digital assets will even include crypto and other means. They are now taxable in the new law. Then corporate gain tax, the CGT, increased from 10% to what? 30%. The corporate gain tax, this applies to organizations. Now, I will also say now, even in maybe not part of the tax law, but you need to know it. If your company is into importation, there is a new import tariff for people that are in the energy space, 15% of import tariff. These are some of the changes that are going to be taking place from next year, and organizations need to start preparing and be ready. If not, the law will come for them. And we're going to see it from this perspective, right? Then there's a 4% development levy that replaces the older levies in terms of some of the changes. Then there's 15% minimum effective tax rates for multinationals. If your company is multinational, you need to go and look more about this. There's a 15% minimum effective tax rate for multinationals. But in the categories of companies, we have a small company, and in the CAC, a small company for me is, I think it's a company below 20 million or 50 million, right? If your company annual return or budget is below 50 million, I think it's 50 million, you are not going to pay tax. So there's a small company exemption in the new tax law. The VAT still stays at 7.5%, but they've expanded the rated goods. So some goods are going to be coming in which are going to be taxed. Very important for us to understand that, right? So let me go to the next one and talk about some of these things in terms of the key changes. Another one we need to know is that you are mandated to disclose. You are mandated to disclose. There must be a tax disclosure. There must be a tax disclosure. There must be a tax disclosure. And the law here says that you are mandated to do even a self-disclosure. You are mandated to do a self-disclosure. And if you don't do this, the law will come for you. So from 2026, you will be the one to disclose what your tax is. You have to file it and you have to disclose it. And if you don't disclose it, there's going to be a penalty for you. Right? So now another important change is that you cannot engage with a business that doesn't have a TIN, that's a tax identification number. You can't engage with a business that doesn't have a TIN. So for all HR professionals, for all business corporations, right? If you are dealing with other businesses, if they don't have a TIN, that's a tax identification number, you cannot do business with them. You cannot do business with them if they don't have a TIN. Very important for you to understand that. So if you are dealing with vendors, if you are dealing with businesses and everything you're doing, make sure that that business has a TIN. And in fact, it is important to ask them for their tax clearance certificates. Oh, you're doing business. What is the tax clearance certificate? Can you give it to us to show that you're doing business and to show that you are in business? Now, if you do business with someone that doesn't have a TIN, you are going to pay 5 million penalty. 5 million naira penalty you are going to pay. So also, you won't say that, oh, the person has given me a TIN number. You must also verify the TIN number. That's the tax identification number. You must verify it too. And if you don't verify it, it is also likely that you're going to pay 5 million naira penalty. And this is very critical for us here, that we deal with businesses. We have many vendors that we register in our system. You must make sure from January that all of them have a verified tax identification number. you can go ahead to even ask them for a tax clearance certificate that they've been cleared. Very, very important for us to understand that in terms of TIN. Then also, some of the things that will begin to argue that if you know that you're going to do business with someone that doesn't have a TIN, a tax identification number, this is not advisable. But just to say, if you're going to do business with the person and the business is so much, maybe the value of the business is so much, then you have to say, oh, I'm willing to pay the 5 million naira penalty to FIRS or LRS or your state tax system. But because you know that the value of the business, so you can even factor the cost of the penalty in doing business. But this is not advisable. The best thing is to do what? To make sure that you are doing business with someone that has his or her TIN, or the company has TIN. Even as a business name, if you register as a business name, you must have a TIN, a tax identification number. In fact, I was registering someone as an individual business. The first thing we had to do was, after registration, was to get the TIN, because you can't do business without TIN. Nobody's going to engage you. Even if you are doing as a personal business person, nobody's going to engage you if you don't have your TIN. Very, very critical for you to understand that. Right? So, and then another thing to note here is that there is an interest on penalty. If you've not paid your penalty, the interest will be compounding. The interest will be compounding for you. So whenever you are about to do your tax clearance, they will say you are owing this. So you won't even want to count it as a deferred tax option. Don't see it as a deferred tax. Once you have a penalty, you have to pay for it, or it will be compounding. It will be compounding for you. So as a business owner, as a HR person, you must understand and know that your business must make sure that they are obliging and following these new tax laws. If not, they are going to be found guilty and they're meant to pay for these penalties. Now, if the tax authorities send you an objection, you have 30 days to respond. You have 30 days to respond to the objection. Let's say that they've come to you and say that we've discovered that you're not following some important tax laws, or you are found guilty of this and this, and they brought charges for you. You have 30 days to respond. But the interesting thing, which I feel like is a lacuna based on this new tax law, is that in as much as you have 30 days to respond, the tax authorities don't have any number of days to respond to you. So let's say that you've responded to them, or they sent you a query and you responded to them, or you're challenging what they're saying. The law did not provide any number of days that they will take before they respond, so that they can even ignore you. They can even ignore what you're saying and respond anytime they want. So, but for you, you have 30 days to respond. And if you don't respond within 30 days, it's another offense. It's another offense if you don't respond within 30 days. Now, it used to be 90 days in the previous law, but in this new law, the law has curtailed it to what? 30 days. And we need to pay attention and understand that. Now, what are the HR and payroll implications for this new tax law? That means that from January 2026, we have to update our payroll. For all the personal income tax thresholds, we have to update our payroll. That means that the payroll you're currently using is going to be updated. Then you're going to review all employment contracts and benefits. You're going to review all employment contracts and benefits. Very, very important. They're also going to communicate the pay changes to employees, because for some people, their taxation might make them to begin to earn more or even earn less. But a change management plan or a communication plan will have to go out to all employees, communicating these new tax thresholds. Then you must also prepare for audits and digital reporting. The new tax law has introduced a lot of digital reporting that you log into the new tax system. In fact, sometimes there is the Tax Pro Max, and there is even the tax session of it. Then there is a Tax Pro Max. So if you log into your Tax Pro Max session platform, you can do all the digital reporting and file everything you need to file without even going to the tax office. Very, very important. So you have to also understand that as a HR person. As a business owner, some of the compliance checklists you must look out for is that you must conduct a tax impact review. You must conduct, and these are some of the things you begin to suggest to the business owners. If you're a HR person, we have to conduct a tax impact review to know how this is going to affect the organization. because it's going to be a different approach in many things we do. Then you must also identify the exemptions. If there are places that you can identify the exemptions, it is pertinent to identify those exemptions and you begin to work towards it on how it can work for you. Like you said, update HR and payroll systems, then train HR and finance teams. They are the two key teams here that this new tax law is going to impact so much. So you have to train them, and then you have to establish a tax risk register. Very, very important that you establish this to track some of the activities so you are not found guilty of any of the provisions. Very, very key, very important. Now, importance of compliance, we started with this and we branched into tax. Now we are coming back to the importance of compliance. To avoid fines and reputational harm, I've explained this before. Then it builds employee confidence. I've spoken about it. You leverage compliance as a strategic advantage. There are some times that we are dealing with business. In fact, I was dealing with one business. One thing that was our advantage is that we told them that we are tax compliant and we are compliant on all regulatory fronts. Very, very important. And that was what gave us a leverage in terms of that business. When they asked for our tax clearance certificate, we were able to provide it for them. So compliance is something, remember I said the goal is to make compliance to become a culture in every organization. That is the goal, to make compliance not to become just something that you will tick off to say, I have done this. It becomes part of you, so that everything you're doing is compliance driven. Everything you're doing, you're doing it from a compliance approach. Very important. So the next one now, what is the action plan? Right? The action plan for the next 3 months now, before even January 1, 2026, or within that period, is to review payroll and communicate the changes. You have to review payroll and communicate the changes. The next one, in terms of the midterm plan, is to update systems and revise your contracts, business contracts, employment contracts, and all that. Then, long-term, monitor and audit compliance. You must monitor and audit what? Compliance is going to become a part and parcel of your business process. What are the key takeaways? The new tax law transforms HR and business compliance. Early preparation will help you to prevent risk. When there is early preparation, it's going to help you to do what? Prevent risk. Then there is going to be integration across HR. So your HR, your finance, and even IT is going to be key in terms of understanding what the new tax law is positioning for you. And not just tax law here, but even from a compliance point of view. Your business applications, so many other things you use for business, there must be a compliance approach in respect to all of them. Then, like I said, compliance is a strategic opportunity. Compliance is a strategic opportunity, and it is very critical for us to understand that. So in conclusion, like I said, the goal is for you to understand that compliance is not something that you're forced to do. It's not something that you just want to do, to avoid penalty. No. If you see it from that angle, if you see it from that perspective, then it is not going to benefit your organization. It's not going to benefit you as a person. But if you see compliance as something that helps to regulate and put the business in check, it becomes a culture. And what is culture? We have a simple definition that culture is the people's way of life. So that means compliance is the business way of life. Without compliance, you can't run an effective business. You might start, and I've given that instance for many startups, many fintech startups to even say, they start up and they ignore some compliance thresholds. And with time, they ignore it, but the thing comes back to bite them. Because they might have started well the first 2-3 years, they are doing well. But when they begin to gain that visibility, and they begin to have to be checked in terms of their books, they will see that they have done a lot of harm. The foundation is not right, and they will have to do what? Answer for it. And most times, the tax penalty that they will pay, they might not be able to pay for it, and they are out of business. Or because there is no compliance, there are so many loopholes in the system, and these loopholes will allow the business to be exposed to many risks and fraud, and the company might not be able to recover from it. Very important for us to understand that. Now, if you're building a house and you build it with the wrong foundation, you might finish building the house and everything from the outset, from the onset, from the out view of the house will be very beautiful. People might even pack into the house, but if you give it time, you might think that house might crumble. It is crumbling not because that the finishing touches are bad. It's crumbling because the foundation, the compliance, the foundation is bad. That also applies to businesses. Your businesses might start well and be doing well, getting so many returns, and you have a system, you have a department functioning. But if you keep evading compliance, at some point it will catch up with you and it might destroy your business. It might destroy your business. Very, very important for us to understand that. So as HR professionals, we are compliance champions. We must champion compliance in our organizations. As business owners, we must also do what? Champion compliance in our organizations. Very, very important for us to understand that, because you can't do without compliance in the business space. And there are different aspects of business compliance. For every department, as a HR person, you must, during the onboarding or different process or during the the knowledge sharing session, you must always make people to understand that for every unit, you must understand the various compliance approach, the various compliance expectations, and abide by them. Very, very important that we understand that. So this is what we're trying to make you to understand. As a business person, as a HR person, compliance is key. And we can't speak about compliance this night. I'm not touching about some of the key changes in the tax law. So these are just my few points that I wanted to share with us this evening. Thank you very much, and over to Mr. Tochukwu.
Thank you so very much. We appreciate that very short, precise, and detailed submission. So at this moment, we want to open the floor for questions and answers. In case you have any question, please kindly raise your hand so he can entertain your question in the shortest possible time. Anyone with questions, please feel free to indicate in case you have a question. Okay. Yeah, thank you. We have 2 hands raised. Grace Okeke. Please, you can unmute.
Okay. So good evening, everyone. Can you hear me?
Yes, we can hear you.
Thank you very much. Thank God for that short presentation. It was quite impactful. So I have 2 questions. So the first question is concerning the rent relief, right? Which states that employees must declare their rent relief. So at what point or how will you show what they say is true, right? For instance, if I have an employee come to me and tell me, okay, Grace, my rent is this. Is that how we are going to record it in the payroll? Like, or will they have to show an evidence of payment to their landlord or something, right? And that's one. Another thing again, what if the employee is the owner of the building? Like the person is the landlord or the landlady and she doesn't pay rent or he doesn't pay rent. Does it mean that gap will be empty for that employee? So that's one. Now, the second one is consigning the fine, like doing business with another person and with another business. So a very good example is we work with some particular cleaners in our company, right? And I don't think I've asked or requested for their team clearance. So in that situation, how will the tax authority knows that, okay, because you said the fine is about 5 million. So how will they be able to know that, I'm doing a particular business and that person's business that does not have a SIN number? So how will they be able to track that for us to pay a fine of 5 million? So that's my 2 questions. I don't know if that's clear. Yeah, thank you.
Okay, thank you very much. Mr. Tango, do you want to answer now or you want to take all the questions and respond later?
All right, let me take all the questions. The first one is rent. The second one is the declaration of how to find out the thing with business owners. Okay, that's fine. I can take all the questions.
Okay, so Nedima Okeke, please, you can unmute.
Okay, thank you. Good evening. Thank you so much. I was seriously looking forward to this conversation. I think the first person that asked the question had somehow covered what I would like to ask, which is on how to go about the rent thing, getting the, is it going to be that we'll ask employees to bring evidence of payment from their landlords, then we now, as a company, consolidate or compile all those documents and use that as a supporting document when we're trying to apply that 500,000 relief for them. So I just want to know how that process will work. Thank you very much. Thank you.
Okay, thank you so very much. I think there is also one question from Ali Ibrahim on the chat. He says, what would you advise a startup with just 4 employees in terms of statutory compliance, especially as it affects payroll? So I think these are the questions we need to take now, and then if there are others, we'll take it after. Over to you, sir.
Okay, thank you very much. Just to answer the questions, very, very lovely question. And I expected this question about rent because it's something that is going to be happening for us. So just to put it in a nutshell, the most amount an employee can deduct or can claim is what? 500,000. Right? That is what you can claim. So you're claiming 20% relief of your rent. Let's say that if your rent is 1 million naira, right, you can claim 20%, which is 200,000. Now, the modus operandi of this is not yet clear in terms of how it's going to go, in terms of declaring if rent is going to form part of the payroll computation, right? Because before you can claim this as a non-taxable item, right? Sorry. Okay, maybe they will read out the question. I was seeing a chat from the box. All right. So if the rent becomes part of the payroll computation, right? So that means that if there is a position for rent allowance, right? There's a rent allowance as part of your payroll. So if you pay 1 million naira, you can claim back 20%, which is 200,000, and it will not be taxed, right? But let's say that your rent is what? 3 million naira. And if you want to claim back 20%, it will be 300,000. But the law will cap it at 500,000. The law will cap it at just 500,000. So, but the direction we are seeing this is going is that in terms of payroll computation, businesses might begin to put rent allowance, if it's not already there, as part of the payroll computation, and employees who declare their rent and all. So some of the provisions is that you must get the details of your landlord when you're filing your tax, your personal income tax. You must, because it is there already, you must file the details of your landlord, put their name, their details, everything must be filed there, and it is seen. And you must put the amount you pay as rent, so that you might be able to claim back a particular aspect of it, and it's not going to be taxable. So that is the thing. But in terms of maybe how it's going to work for some organizations, if it's not already there, is that you might introduce or let your employees understand that first of all, they have to go to the tax platform and file and put in the details of their landlord. So your landlord, if your landlord is charging you rent for 1.2 million, you go and put in the details. So you might be able to, in terms of when they are doing tax filings, claim some part of this money. That is what is very important. But we hope to see how the tax regulations or the regulatory bodies is going to go about this from next year. And with time, we'll still advise. But what we know now is that there is a rent relief that has been provided in the new tax law. The whole modus operandi is not 100% clear yet, but what we know is that you must go to the tax platform, input the details of your landlord, everything about the landlord, right? And say, declare, this is my annual rent. And you can't falsify it. Maybe they might need to reach out to your landlord to say this, but I don't know, right? But that is how to go about it. But you're going to claim 20% and it is capped at 500,000 naira. That's the aspect of it. Then for one that asked about the declaration of TIN, the law is clear about it. If you're going to do business, for instance, I don't know if you say for blue collar workers, maybe their vendor that represents the blue collar workers, you must make sure that in the SLA must be reviewed and they must update that they have a TIN. They have a tax identification number. If not, you can't continue to do business with them. So you're going to review all your vendors lists to make sure that all of them have a verified tax identification number. If they don't have it, you can't do business with them from next year, or you will pay penalty, except you are willing to chase the penalty because the value of the business you're getting from them or they're getting from you is more, and they can help you pay the penalty. But that is also not an advisable way to go. That will be trying to go circumvent the compliance process. So for every business, even if you're dealing with an individual with a business name, the law says you're going to have a TIN, a tax identification number. And if you don't have a verified one, you can't do business. So sorry, can you read the question of the one person that stated in the group?
Yes. He says, what would you advise a startup with just 4 employees in terms of statutory compliance, especially as it affects payroll?
Okay, this is a very interesting question because I just had a conversation with someone today about this. He's just starting. So for a startup, there are some compliance checkbox that you must tick, and part of it is payroll. For payroll, right, you must now find out if you want to engage your staff under full employment contracts or under fixed term contracts. If it's a full employment contract, that means you're going to be paying them, you're going to pay pension, pay payee, and all. But if it's under a contractual term, you might just be paying 5% with withholding tax, right? Which might shroud you a bit, might cover you a bit. That means you are engaging them on a contractual basis. But if you're engaging them and you issue them a full employment letter, then all the statutory deductions are going to be in place. In fact, the law will even want you to make sure that everything is in place. So the pension, 10% from you, 8% from them, deducted, the full payee deducted, you break it down to their leave allowance, 13th month, basic, housing, transport, a lot of other stuff that you might want to do. So if it depends on the way you're moving and the way you want it to go. If you're engaging them on a full employment basis, then you have to pay these things. But if you're saying that, if you're saying from the perspective that, oh, for now, let's deal with them as contract staff, then what you just be paying in terms of your statutory deduction will be just the withholding tax. So that's my response to that. But that is not, payroll is not only the compliance checklist for a startup. There are so many other things in terms of the compliance checklist that you also need to observe in terms of that as a startup, right? But what I advise is if you're still starting, there are some ways to, the word is not circumvent, but there are ways to start so that it will not expose you to many statutory obligations that you are not ready for, since the revenue might not be as robust as an established business already. Thank you.
Okay, one more question here. In terms of TIN, there is one from Joint Tax Board and another from FCT IRS. Should a business have both or just one from either of the government agencies?
So I think for clarity, once you have your TIN from the FIRS, the one that issues you the tax clearance certificate, your TCC, you're good to go, right? So in fact, the one if you register your business now, the one they give you from CAC might not even, you have to still go and register to bring it in terms of to get your tax clearance certificate. So for me, I believe that the one under FIRS that you get from your tax clearance certificate suffice. That's the one I get for businesses. That's the one I used to operate in terms of my own business, in terms of also the tax clearance certificate. So for me, I would believe the one from FIRS is actually the one to use for your business.
Okay, Uncle K has a question. Please, you can unmute, sir.
All right, thank you very much. And thank you for this very topical presentation you're having. Is still something very new. And then there will continue to be discussions around it. And as you have rightly said, it's an unfolding situation, especially around the rent relief. You have rightly spoken well about it, that is still unfolding. But from what some people are speculating is that truly, as you have said, that you might need to provide the details of your landlord, and all this will give you some kind of maximum relief of 500,000. However, I think it's an attempt by the government to identify homeowners and identify those that are paying tenement rates and all these charges or your obligations you need to be doing to the government as a result of your home ownership, which you are making money from. All right. So we might be looking at the direction of tax relief. I am very sure the government is looking at another direction of actually capturing those that are home owners. Okay, that's just one insight I need us to actually look at. Secondly, you talked about fixed term contract and normal regular contract and the tax obligations therein. I think that the situation has changed. If one is on a contract, fixed term contract, it's not the 5% anymore. Even the fixed term contract, or whether you engage somebody, the person should still pay the tax as applicable to the regular contracts of full-time employees. That is what it is now. It used to be 5%, yes. And then a lot of people played around it that time, just issue some temporary contractual agreement to staff, reduce their tax obligations, but all that has been revised. And then whether you are a full-time contract or you are just a short-term contract, you should also pay the full tax obligations that is required of it, irrespective of the nature of the contract you have. So those are just the two brief things I wish I could just quickly chip in. Thank you very much. By and large, this is an ongoing discussion we'll continue to have. Thank you so much for having me. Thank you.
Okay, thank you. Thank you for that comment. For the fixed term contracts, yeah, there's a little bit of change of law in that aspect, but let's wait and see how the application will go in that respect. But I still believe that it's still well, I don't know. I wouldn't like to speculate, right? The law is the law, but we'll get to see how that is going to pan out. But as it stands now, most times startups, in terms of their statutory obligations, most times they shroud their contractual obligation. For some people, as a contract staff, like they are dealing with you on a contractual basis, they're dealing with you as an independent contractor, different from an employee. So if you're using that definition to to look at it. The tax obligation tend to be different, but yeah, I hear you clearly where you say that, yeah, that position is changing because some people try to circumvent and find a way around it, but we'll see how it plays out. But thank you for your comment, and that's actually a very beautiful one.
Okay, thank you very much, sir. I'm no longer seeing any hands up, so it means Mr. Tango Simeon has done justice to this topic. And of course, since it's an ongoing conversation, I'm sure if anything changes, he will still be back here to give us more updates and we'll continue these conversations until we all get it right. Ladies and gentlemen, I want you to kindly unmute your mic and say thank you to him in your local dialect, if you can. Maybe wave hands, drop chats. Let's appreciate him, please. Thank you.
Thank
God
you.
bless you, sir. More wisdom.
Mr. Thank God.
Thank you,
Thank
sir.
you.
You all are speaking in tongues.
Now good day.
Thank you so much, sir.
Bless you.
Tochukwu, you didn't speak in your local language.
Oh, really?
Yes.
My local language, Nagodi.
Thank you.
All right. Good night, everyone.
Good night. Thank you very much, sir. See you again tomorrow for another exciting episode. Please don't forget to join us tomorrow, 7:30, as we continue conversations on topical HR issues. Have a good night, everyone, and enjoy the weekend.
Same here.